Greetings traders, this is Houston Trong from thetradingedge.org, and here is your weekly market outlook for March the 15th to the 19th, 2021. So first off, I hope you had a good trading week. It was definitely an eventful one with a lot of volatility, some head fakes along the way, but in the end, as the story has been going for the past I don't know, a couple years, or maybe more than that actually, the bulls won out once again. It was another buyable dip, and congrats to the SPY holders, Dow holders, back to all-time highs. The question now for the coming week is, does the Qs begin to play catch up, or does the rotation out of tech / growth continue? So that's going to be what we're going to look for in this week's video. So before I jump into the charts, just want to say one thing. So I release these videos on a fairly frequent basis. I used to read them weekly, and I took a bit of a break a few months back because the markets were frankly just kind of just grinding higher. There wasn't a lot to talk about, but the past several weeks have certainly had a lot of more volatility, a lot of a bit of a change in directionality, and that made for some interesting observations. Going forward, I'll continue to drop these videos as the markets kind of dictate. I don't want to just drop one for the sake of just dropping one. I really want to look for times where I think I have something of value to add. The goal of these videos obviously is to give to share some of my my thoughts, and frankly, I find doing these videos actually good for my trading as well, which is why I like to do them. But I also just want to make sure that if you're watching these videos, that what I'm doing is I'm helping you stay on the right side of price. Obviously, because these videos don't drop daily, there's a lot to be there's a lot that can happen in between these videos. But hopefully, the principles that I'm talking about in these videos are keeping you on the right side of price, and ultimately, if you're on the right side of price or that trend, that will make your trading easier. And that means not fighting trends, not shorting when you should be going long, not going long when you should be shorting. And sometimes this also means not doing anything at all, right? So anyways, with that preface out of the way, let's get into the charts now and spend the rest of our time discussing the price action. That's what these videos are about, is the price action. If you're looking for macro calls or analysis of potential Fed moves, that's obviously not what we do here. Let's get into the charts. So man, this VIX chart, I've been talking about this since I posted this in the Slack room that I host earlier in the week. And if you're interested in that Slack room, let me know. I can send you an invite. But as there's a number of us, probably about a dozen of us or so, actually a couple dozen of us who hang out intraday in that chat room. And I posted this earlier in the week because it really looks like now, I've been tracking this chart since June of last year, since June of 2020. So it's been nearly a year now since we started watching this pattern play out, and it finally looks like we're probably gonna resolve this pattern to the downside. Ultimately, we're looking for the bottom of this outside bar to get taken out. It's been a long pattern playing out, and it looked dicey at times, right? But this is the trick sometimes with trading, is that it's very easy, especially if you look at intraday data, to lose the forest through the trees. And so constantly, if you're watching the charts intraday, you're losing yourself in that intrabar volatility. I've talked about that before, the intrabar volatility, and that is what makes trading hard. So this is what these videos I hope are doing for you, is helping you see that bigger picture so that you're on the right side of price. This chart has pretty much told you exactly what you need to know since June of last year. That is, so long as the VIX is sinking to the downside, right, and it's continuing to the downside, the bias is to the downside on the VIX. That means being long of equities, right? And so the VIX has just been telling you that since again we broke that here. Since this thing went outside, inside, and down, it's just basically been a slow bleed to the downside. So on the monthly chart now, let's fast forward. Momo down on the VIX, so outside, down, down, continuation. That 1315 area now is one what we're looking, that's the level, and we're now just 80 cents. What do we close on Friday? 1395. So we're just 80 cents away. So man, that's it's the VIX closed near the bottoms for the week here. So here's the weekly chart, and we got that pattern, right? So this past week, it's kind of tight here, but I'll just here, I'm going to turn off some of these lines because it's a little bit distracting. Let's turn off this line here. Let's display that just on the daily, and likewise at this one here, we'll display that just on the daily. So, we were looking for that outside. Does this help if I put it log scale? A little bit. All right, so we're looking for that outside inside, and we're looking for how is it going to resolve, right? That was what we were going to look for. And once it broke that area, 1465, that's the prior week's low. We know the patterns outside, inside, and down. Did price come back up during the week to scare some folks? Absolutely, that's what price does. It's the constant back and forth, looking for stops, looking for the weak hands, stopping them out before the move actually happens. And so that's what happened. We had a bit of a scare on Thursday, Friday, when the markets sort of gapped down. Friday, the markets gapped down as well before coming back up again. And the buyers are just picking it up. So SPY back on all-time highs. We'll talk about that on the next chart. But for now, VIX, into let's go back here, multi-month lows, right? So this thing is really, really sinking, and that 1315 area is what we're looking for. So on the daily chart, let's jump to the daily chart now. Actually, before the daily chart, remember last week, if you recall in our video, we were saying, okay, the 2-day chart is what you want to be looking for in terms of one level. That's this one here, the inside bar, because this is inside bar up, inside bar. That's an inside bar reversal off of this area we've been watching for a long time. That yellow box, right? That's the area we've been watching. That 1630 area. If you recall, if you go back since I started doing these videos again, 2 months ago or whatnot, we were saying that 1630 area is significant. That's something you need to watch for, and it was not able to break through that. So it's very much it was a big heads up there. Showed us the buyers could not hold above that, and now it's just basically a fade. So outside, up, inside. Anyone who got long on this sequence, guess what? We got the broad information there. We know it's coming out the other side, and boom, out the other side, stopping at anyone who got long in the sequence. So if you got long back here, let me just move this down a bit. If you thought you were smart and you caught the bottom here on the Feb 23rd, that week of the 23rd of February, and you rode it up, and you made some decent gains here, 10% up. That's that's not crazy for the VIX. The VIX obviously can move a lot more than that once it really gets going. Had another. These are 2-day bars, so this is takes 2 days. It was a plus 9% roughly move there. You lost it all here, right? So if you did not cover, basically you got stopped out in the sequence, or you're still underwater at this point. So nice move inside up and inside bar reversal short, that level there. Low of 1483. Once I got taken out, we knew right away I was going to go after that pivot. That causes the outside, inside, and down the week. So boom, there's your VIX trade. On the daily trades, on the daily, it makes it very obvious, right? Here are the levels. We said the 1630 area. That's the box. We have the quarterly open. We saw that get tested last week. I think not this past week, but the week before that. It tested 2 times, right? We had that double test. The first test was higher, the second test was lower. They could not break above there. They could not clear above the quarterly open. And then once you get that full time frame alignment, you lose that choppiness, right? So here, remember not this past week, the week before that, it was tricky because you were above the weekly open, above the monthly open, but below the quarterly. So the buyers try to gun it. They hit the sellers here. The sellers won out, but then the rest of the week, you got stuck in this range. This week, Monday, right here, this low here on the Monday was 1483. Okay, so that triggers that 2-day chart. If you recall, I just talked about a few moments ago. So even though the day ended green, the level had already been violated. That means the sellers are already actually in control, even though they close it green. This is what's tricky sometimes, is that they don't make it easy for you sometimes to hold your trades. And sometimes those are the ones that are uncomfortable because you want to be up money right away. Unfortunately, sometimes the markets, they open and close, right? So that's a tricky thing with the with equities. Then the stock market is that it doesn't run 24/7. So the day has to end somewhere, and so they squeeze them and they close them green. So had you gotten short here, it's like, this is uncomfortable. I'm down. Let's say you shorted the low here, Friday's low, and now you're down. You're down a bit of money. And finally, it works itself out. But that first day, I bet you, if you were short that, you were kind of doubting yourself, saying, "Is this trade really working?" And in fact, it is working. But they just don't let you have an easy day that first day into that trade. Okay, but that's what you see all the time, and that's what you have to get used to. Is that type of first day move? We've seen a lot now where it's not the first day move that's actually the most spectacular. It's not even spectacular, but it's not you don't see the follow through necessarily always on the first day move. It's that second day move, right? That's really the day that kind of where things, you get that continuation. So you get that second day move right there on Tuesday, and then on Wednesday they try to close green once again. Look at that, they gap it down, and on Friday, nice move on the VIX on Friday, because look what happened. It gaps up, scares all the longs, right? Scares all the longs. A lot of people got out, and then there's an outside bar. So that's basically, a red dog reversal, and people get stopped out had they gone long. So very nice stuff on the VIX, just clearly in downtrend, full time from alignment. It is an outside bar here. So here you do need to watch out, because it is an outside bar. It is with moment. So that means it's, if you get a momentum move to the downside, it could go down further, but then you have to watch out, because you can get those snapback rallies when you have outside bars, because then people are chasing, and then people will have bad trade location, and it's very easy for the trade to snap back against you. So now, again, things could get extended here if they continue to go outside bar down, and then I would expect some sort of snapback, or they just gun them. They go Momo down here, right, and they take out that 13-15 area. So that's something to watch for. Now you do that, have that outside bar. How does that thing resolve itself? Okay, so if you're long. If you're short VIX or long the equities markets, you do not want to see VIX this coming week do an inside bar reversal to the upside. That means you do not want to see this guy take out this past week's highs. So if somehow this thing goes down some more, and all of a sudden comes back up and takes out that pivot high, that you do not want to see that, right? So that's the level you should be watching for here, is to possibly defend. It's that 1552 area. You do not want to see the buyers take that thing back up there again. Again, not saying the markets are going to fall apart at that point, because it's the understanding that in order for a real reversal to happen, one with big magnitude, you have to have a reversal on a wider time frame. So all reversals start from the micro and then proceed to the macro by definition. That means things happen on a smaller time scales first, and then they so slowly proceed like dominoes to turn the small charts reversals into large chart reversals. So you might see reversal on the daily, then on the weekly, and that weekly would then turn the monthly, and the monthly would turn the quarterly. Obviously, when you see a quarterly or monthly reversal, that is very significant, and that's when you really want to pay attention. But this thing here, even if it reverses, it goes inside out, down and up again. You still got that quarterly open right there, and that's the level I'd be watching for, because you don't have full time from alignment. That means anyone looking up there is still seeing a red quarter. It'd be hard to be very, very bullish until you see that level taken out. Okay, so let's proceed now to the SPY. SPY, as I mentioned already, hit those all-time highs. So what should we say about SPY? SPY has had, I think it's 5. Is it 5? 1, 2, 3, 4, 5. Yes, 5 consecutive months of higher highs, right? So higher high, higher high, higher high. And these look like shooting stars a bit, right? If you just say this looks really bearish, doesn't it? A shooting star, markets are going to correct, right? But again, there's no reversal, meaning a reversal has to be when a prior low gets taken out, and there's no reversal there. So literally, it's just stair-stepping upwards, and it keeps making that same movement up. So even last month, I said, well, that kind of looks like a shooting star, but that's not a reversal until that low gets taken out. So that's why we draw our levels. It has to take out 370.38 in order for that bar to get reversed, and it didn't do that. It looked a little shady there, remember, in the beginning of March. But since then, look, it's taken a high. It's creating a higher high now. And that's looking like it's going to be a big green candle to the upside. We still got 2.5 weeks of trading left, so nothing's impossible. This could still fall apart. But looking at the monthly chart, the worst thing that could happen right now for the sellers, for the buyers, excuse me, is for this thing to turn to a red month. Not just red, but the worst case scenario is it goes red and turns to an outside bar to the downside. Meaning we're here now. Somehow the sellers need to go all the way back to the range again, and then close it down here to turn it to a red outside bar. Okay, so that would look like something like this. See that big red outside bar? That's what it would have to look like. Okay, but then the next month, what do you do with that outside bar? Well, if all of a sudden it goes outside inside, like that, we know how that resolved. It went to the upside, so it's not even game over yet. You really want to see what's after the outside bar, and whether that's a Momo down situation, Momo inside, or Momo up, or some variation of that. Right? Sometimes you get a Momo up move, but it doesn't really go anywhere, like this. Right? So it goes Momo, double Momo. It goes up, doesn't really go anywhere. It falls back in again before it goes back up again. So that's the kind of sequence here that that these are the different kind of scenarios and sequences you can be looking for. That's the understanding of price. So back to SPY. So SPY, nothing really much to write home about. SPY just grinding its way higher. All-time highs once again. If we said, last week, look, that's kind of like a hammer, a shooting star. I'm not sure about a bullish hammer. Excuse me, not a shooting star, a reverse shooting star. And once you take out that pivot high, we're going back to all-time highs, and that's what we did this past week. Up 2.72%. SPY back to those all-time highs. The issue we now here with SPY is that you're a little bit extended. This is getting a little. Oh, sorry, not SPY, but Dow. We'll talk about that chart in a couple charts here. But the SPY still has some weight because we're not even close to that Bollinger Band yet. So you still have some room to go still. I still expect we get some more follow through on the SPY here. SPY 4-hour chart looks like this. I think we had a nice inside bar reversal. Yeah, currently playing out. So there you go. Here's your Friday, right? A gap down. Pretty strong because he gaps down and then people buy it. So that's that's an inside bar down. Turn it green. And then, sorry, is this, yeah, that's right, 4-hour. Inside bar down, and then coming back up, and guess what? We're going to probably go after that pivot there, at the very least, and then back to those all-time highs again to see fresh all-time highs. So the range for the coming week is as follows. What is this? What are this week's highs and lows? We'll paint those in, and that's the ranges you want to be watching. And just to be very clear, right? So the reason why we draw those levels, and they're very simple levels, because what we're always trying to understand, and this is what this we're trying to figure out here is, are we trading inside a range? Or are we trading outside of the range? That's very important, because then that can change your expectations. If you're trading inside the previous bar's range, correct? That means it's consolidation of some shape or other. When you break outside the bar's range, then you're getting expansion, right? And we want to know those different conditions because that will change our behaviors. When you're trading consolidation versus changing expansion. And the question always is, are you shooting into highs, or are you shooting into lows, or are you reclaiming a range? As I said I think it was last week or 2 weeks ago, there's two principles that I think are really important. Number one, not to try to catch bottoms and tops, right? So these videos, I don't try to nail bottoms and tops because I believe that I'm trying to, especially with swing trading, you want to try to ride that trend as long as possible, so you're not trying to catch bottoms and tops. Even if you can, you're gonna leave. Well, it's very hard to catch bottoms and tops consistently, and sometimes you're gonna get out early and you're gonna leave a lot of money on the table. Secondly, you don't want to be buying bottoms and tops. That's the first part. Secondly, you don't want to be buying bottoms and tops, buying tops and selling bottoms, right? So that's the mirror opposite of that. But a very important supplement to that is, you cannot be buying tops and selling bottoms, because that's also the wrong thing to be doing. So those are the two things, the two principles that I'm always trying to understand is, am I going into highs and then I need to watch out about buying, or am I selling in the lows and I need to watch out that I could be, the last guy selling at the bottom of the range. So that's why we talk about those ranges, and we're constantly watching them. Okay, so let's go on to the next one, the Qs. Okay, so on the Qs front, if you look on the higher time frame, the Qs right now it's still going Momo up. So Momo up. So that means we've had 4 consecutive quarters of higher highs. That's a full year of higher highs. We had that big pullback, right, in Q1 of 2020, but since then, look, it's been gangbusters. Now this quarter is doing a lot of nothing so far. So we have again 2.5 weeks left in this quarter. And we basically have a doji. Okay, so right now, it's basically a flat quarter on the Qs. It's up 0.5%. Okay, so that's, even with all the selling, it's still up 0.5% for this quarter. We want to be watching that, especially in a couple. We'll revisit this chart in 2.5 weeks to see how the new quarter starts off. But for now, it is how it is. It's still a quarter where you've had a higher high. On the monthly chart, remember we said last week, this looked a lot more bearish because it had been trading below the prior bar's low. It was actually trading down here, right? So the Qs have come back a bit now. This week was a pretty good rally and a lot of names on the Qs, and you came back in the range. And this is what I said in last week's video. How do you repair a chart that has become broken? Remember, it was a shooting star like this. That's a shooting star. And how do you repair this? It's very difficult to repair. It's very difficult to turn the bar bullish unless one of two things happens. This turns to an outside bar to the upside, So that's the mirror opposite of the VIX, right? It's because it goes outside bar to the upside, creating a big green bar, or it turns into something like this, a bullish hammer to end the month of March. And then next month, right, you have April, it takes out this bar's high and you're off to the races again. Okay, so that's the best case scenario for Qs, those two scenarios. Number one, it turns into an outside bar. That's a little unlikely because that's kind of hard to do. Not impossible, but that's always the tougher scenario, is to get that outside bar to the upside or the downside. And number two is you close something like this, or it turns, or even you can close as green for the month of March, and then next month you take out this month's highs, March's highs, and that thing is going to go back, guarantee you back, and go after that pivot, right? They're going to immediately go after that pivot and get some fresh all-time highs on the Qs. There's your Qs on the monthly. On the weekly, here we go. Setting up now. We look setting up for the potential Momo down reversal to the upside on the weekly chart. Right, so it goes Momo down, stalemate this past week. The sellers really couldn't do anything with what they had done the prior 3 weeks. This week was a lot about short covering, so that's simple supply demand stuff. It's all technical buying and selling here, right? Those folks who made a bunch of money to the downside here, do you really want to sit here and let's say you shorted Tesla? Do you really want to sit on Monday and be short when Tesla bounces 20%? It's hard to sit there and see your profits evaporate like that, right? So we just saw a lot of people short covering here. The issue here now is that you can see there's your monthly open still there. There's your quarterly open, right there in blue. So you still have the time frames working against you on the Qs. But now it looks like we may have recovered that quarterly open. We're slightly above it now. If we break above this high right there, this past week's high, guess what? That's full time frame line back to the upside again, and then you potentially go after that pivot. But you still can't forget that monthly chart is still damaged, right? This monthly chart is still damaged. So I wouldn't expect it to be that easy it's not going to be a 1 week move where all of a sudden it goes pop and then it takes it out in one single shot in one single week. I don't think it's going to be one single week that's going to go like that and take out that high, because that would be an outside bar. And as I said, I just finished mentioning the outside bar move is a little bit more challenging. More than likely, the scenario is we go inside bar up, maybe we bounce around here for a little bit for a couple of weeks, and then we go for. This would be the bullish move that eventually then in the month of April we finish that move back to the upside, taking out that pivot high right there. Okay, so there's Qs. That's the level to watch for right now. That's an inside week, very significant. We want to see. All bets are off though. If you break that low down here, this past week's low, you do not want to see that taken out if you're a bull on the Qs. If that low gets taken out, that's significant, and that will change the picture dramatically, because now anyone who bottom picked this past week and try to defend these levels, if you stop them out, yeah, it's going down further. So that's definitely the level to watch. So 299.51 on the Qs this next week. So Qs wise, here's something to watch for. Just the on the 4-hour chart, just like we said last on the SPY chart, we have an inside bar reversal kind of playing out right now, but you got the full-time misalignment, the time frame misalignment. So there's your monthly open, and that's acting as resistance. Can you see how that's how solid that resistance is? It tags that line, and they cannot take it higher. So these levels are very significant. People are watching them, and now you have this mixed time frame alignment, right? So the buyers had a really good run here. Look, this is Monday. It starts off as an outside bar to the downside, so it looks like things are going to flush on Monday. It looks like it's going to take out the prior week's low. This is a move to the downside. Tuesday, they squeezed them, right? So look at that. It gaps up. Imagine, you're sitting on a short. If you short in here on Monday thinking, we're going to get continuation, we're going to take out Friday's lows. What happens to you on Tuesday when all of a sudden the market gaps up and, you sold down here around 300 and opens up at 307.47. So you got $7 against you right from the get-go, right? So these guys got squeezed. They got really squeezed. So they got stopped out, more than likely. They got stopped out. Anyone who got short, who got late. And this is the issue. This is what we're always, I was trying to point out. Are you shorting at the bottom of the lows of the range, right? If you are, you're the last guy down there, right? That's poor trade location. So if you're shorting in here, you're hoping this is going to come out this way. Poor trade location, you get stopped out right away. Maybe the short does work, but shorting down here is not as good as shorting, maybe when the setup happens over higher up here. Let's look at the daily chart. We'll see if there's a short possibility there, because we are looking for that inside bar to break one way or the other. So Right now, so there's your pivot highs, 319.86. That's the area you're looking for to get taken out to create that inside bar up on the weekly chart. But there's your Momo down reversal, the upside runs the whole week until it hits the monthly open, and then they take profits, and then they drop in on Friday to some more green on Friday. Okay, so on the 2-day chart, excuse me. Yeah, so this would be something to watch out for here now. So if you take out this low on the 2-day chart, this one here, 311.39. So on Monday or Tuesday, if you open here and it comes in, it takes to that low. That'd be significant. You don't want to watch. You don't want to watch for that, because then you'd have full time from alignment back to the downside again. So that's when you have to watch out and see, does it break down? Is it able to take out that 299.51 area? That would be significant. Okay, so that's what I'd be watching for this week, is can you take out this prior bar's low? This current bar's low. Let's go Dow, because the Dow has been grinding higher. Boeing has been helping along as well. Boeing had some good fundamentals come out this past week, with more airlines buying than canceling for once. So for now though, look at the Dow. Man, what a move in the Dow. This thing has just been cranking on all cylinders. 1, 2, 3, 4, 5 higher highs on the monthly chart, and there's that Momo down reversal that we identified last week, right? So the question was last week, let me turn off the log scale here now. There we go. We're sitting on top of that broad information, right? The trend line. We had a Momo down move. It turned bullish when it turned into a hammer. That shooting star came back with the hammer, and then all you gotta do is take out that pivot high. We knew we were gonna get to all-time highs. We got that this past week. Okay, and now you're back above that trend line. So that means it's range expansion once again on the Dow. How far do things go now on the Dow? The tricky part here is that you are going into those Bollinger Band highs. This is the daily chart. You're going right into those highs now. Okay, so this thing has to keep running. If it doesn't keep running, you're gonna have a pullback. It's gonna pull back in, and it's gonna basically gonna have some folks take profits or get short to play the overstretchedness of this Dow chart. So Dow now is certainly stretched out. You can see we've had similar runs before in the past, and doesn't mean it's because you're stretched doesn't mean it's gonna correct and crash. All it means is that if you're buying at these, if you're buying into these highs, you have to expect that it's gonna pull back. And then if you don't have good trade location, you're probably gonna get stopped out. So this is what I've been, that's why I talked about it. Is you wanna be mindful or reticent of buying into highs, because we're trying to ride the trend as long as possible, but at the same time, we don't want to be buying highs and selling lows. So this is, back in August of 2020, look, the Dow had a multi-day move into the Bollinger Band highs. It opens higher, and this is the scenario you want to look for once again. The buyers here have everything they could ask for, right? You're going into highs, and you get a gap up. That's great. Now, what happens though if the buyers can't hold it up there? Then you're going to see a reversal, and then you might see a multi-day pullback like we saw there. This is not the end of the world. It's just a multi-day pullback. But if you buy up here, you're probably gonna get stopped out, right? You're gonna get stopped out, or it's just gonna feel really uncomfortable as your position just stays underwater for multiple weeks, right? That's basically 2 weeks you're kind of underwater here if you bought the high of that. Okay, so same thing here. We're back at these levels again. I can give you the other examples where they do pull it back. So this is June of last year, multi-day move on the Dow. Upper Bollinger Bands. Once it breaks below there, then you actually do get a pullback here, right? And so that's more uncomfortable, because then here you bought this, all this grind up was extinguished in basically 2 or 3 bars. So that's what you want to watch out for, is when you're buying this grindy up stuff, it doesn't take much for price to basically just correct very quickly and stop you out. So the saying goes, right? It's the stairs on the way up, but it's the elevator on the way down. Right, and that's what you can expect once again when you come up here. These are the stairs on the way up. So look at the steepness of the angle. So would not be uncommon to see a big elevator drop down just to stop out anyone who got a little too aggressive to the upside here as you're going into highs now. Right, this just has to keep going. That means it has to attract new buyers. If it doesn't, rip, you're gonna see that situation. So watch out on Monday. If you gap higher on Monday, do they fade it? Does it get back into Friday's range? If it does, watch out for that potential elevator ride down. Let's go Russell, because Russell's been another one of those charts that's been on fire. Russell, what do I want to say about the Russell? This one here, it's had 6 consecutive months in a row. So the SPY in the Dow, SPY in the Dow is 5 consecutive months. But look at the Russell. 1, 2, 3, 4, 5, 6 consecutive higher highs in a row on that Russell chart. Back to all-time highs once again. We had a simple reversal here, right? Outside, bar down, then reversal to the upside here. And on the Russell chart, yeah, pretty clean stuff here. But once again, as I said before, you're going into those Bollinger Band highs at the all-time highs. These are all-time highs now, right? So, you know, again, watch out for that potential elevator ride back down. Not saying it would crash, but again, it's just those guys who are chasing. If you're buying a breakout, right? A lot of people do this. They draw that vertical line saying, this is a breakout because we're all-time highs. It's all blue sky. And that is true. That is factually true. The issue is that you have to hope, that's basically what it is, that there's going to be more buyers coming in who are also going to, you know, push price higher. Otherwise, if there aren't, they're just going to come back through the range again. Because the issue here is that you have no one else to stop out anymore, right? There are no more stops up here unless the guys got really lazy and they didn't put their stops when they went short down here. Really, it's, you know, there's not that many. There's no apparent stops in this vicinity. There really shouldn't be. People shouldn't be putting their stops up here if they're short from down here. They've already been stopped out. If they were good traders, they'd stop themselves out. They're not going to get squeezed on the way up. So at this point here, right, the game is one of confidence. Are investors confident, and they're going to keep putting money into the Russell? Let's go TSX. TSX, you know, what pullback, right? There is no pullback on the TSX. All that stuff with Kathy Wood and her innovation ETF has nothing to do with the TSX. TSX is very, very heavy in cyclical names and commodity names, and this thing went to all-time highs this week on a very simple pattern like we talked about before. The outside down, inside bar, and back up again, and that thing's all-time highs on TSX. If oil keeps rocking here and, you know, we start to get a pickup in metals plays, yep, TSX stands to gain from that, and there's no reason we don't see higher prices on the TSX at this point here. We're really starting to see some range expansion now on the TSX. It's been a while. Things have been pretty tight. We had some really tight weeks there, but now it's starting to pick up steam again. So TSX, yeah, keep on the long side. Emerging markets. Here's a market that, you know, that I've been trying to talk about for a while now, because I'm saying it's been weak for a while, and finally people caught. I don't know if it's this past week, maybe last week. People finally caught in that. Yeah, the dark charts weren't quite right, but they're starting they started to repair that. We're starting to see a bullish hammer now develop, like we saw in the Qs. You know, it's shooting star, bullish hammer. Was a big red bar here, but it did bounce off that quarterly open, and the buyers have stepped back in now, creating that bullish hammer. Still not done yet in the month, so can't say it's can't say it's out of danger yet. But so long as you stay inside the prior month's range, that means it's not expansion to the downside. Expansion to the downside means you break back below this bar's low, the prior bar's month's low, and you keep going down. That's when you start want to be careful. Is, hey, you start trading below 53.39, that yellow line. That's when, once again, you're getting a range expansion to the downside. Redo our ranges here. So basically, we had a green week, stops the bleeding for a week, and there's the range. Do we break that range once again on the emerging markets? So on the daily here, yeah, so this is just like the Qs. You know, these charts are remarkably similar, so it makes you believe that, you know, again, these stories are somewhat related. On Monday, you actually did get the lower low on the emerging markets ETF, not the Qs, but this did get a lower low, right? So this low is lower than prior Friday's low, but they bought it back on Tuesday. Look, that's a bullish kicking pattern on Tuesday, meaning anyone who got short down here, like the Qs, this is even stronger because it actually opened up above the prior day's high. So you got short down here, ouch. You know, it pops up against you, and you have to cover because this thing rallied from the open here all the way up here at one point and closes there. So yeah, it's certainly they got squeezed, and look where they found the resistance, right at that monthly open, and they came back in on Friday. So you got that mixed time frame alignment right there, and that's where you are with emerging markets. You might get a little higher, right? Because this is the Momo down. This is the Momo down sequence. Notice that Momo down, and then it goes Momo down reversal long right here on the Tuesday, and now you're trying to take out that pivot high there. They're going after it. That's the pivot high to go after there, and then the next pivot high right there. Okay, let's go bonds. Bonds, man. Maybe we should start with this chart. But bonds, I thought we were actually going to bounce this week. So I was under the assumption that it was actually going to bounce this week because it looked like early in the week that the buyers had stepped up just to take it, play it a little bit, give the big picture for a second. We've been watching that 3-month chart for a while now, just like the VIX chart. 3-month inside bar reversal right there. Right, boom, inside bar reversal right here. Okay, and now I said the last couple weeks, this is the level, that level there, and that level there. Those are very likely to get taken out. But I thought that maybe we might get a bit of a relief rally on the bonds, but no, they're not done selling them. So here is TLT inside week and down. We're watching that inside week, right? How is it going to resolve? Inside week and down. I thought maybe you might get that reversal because you're going into the Bollinger Bands, the lower Bollinger Bands, right? So they just have to keep going here now. Otherwise, people are going to get stopped out, and maybe they take up that pivot here before they bounce. Maybe there are still more longs that need to get flushed out before the markets will bounce. But that rally, that Monday, Tuesday, Wednesday rally, they stopped them out. So here, Monday, we actually got the lower low right here. That's when it goes inside bar. So this is what's tricky about it, right? So it goes inside bar down on the Monday, triggering that weekly inside bar down signal on the weekly chart. But then on Tuesday, you get that same kicking pattern that squeezed emerging markets and the Qs, right? So you got that bullish move on the TLT. That turns into a 2-day squeeze, right? So 2 days of green, and then they flush them Thursday, Friday, and they just crushed anyone who basically got long in here, and they really smacked them down to the tune of 2.12% on Friday. So that's a bit concerning because that means the selling's not done yet in TLT. It looks like it's still got a bit of range to cover off down here. 134.45 likely likely to get taken out there. Curious about the 4-hour picture on TLT here. Yeah, so you can kind of see it. Once you're seeing the price action, whether or not you want to do anything about it is another question. I don't trade TLT myself. I don't trade TLT or bond futures. So this is just illustrative, and I just want to show this price actions to help you understand what I'd be looking for. So here's your down day move here, right? On Monday, inside bar down. And down, and then there's your squeeze on Tuesday, inside bar. On Wednesday, here's your move, Momo. It turns into a Momo move, right? Momo up, and then there, once that low gets taken out, there's your Momo up reversal short back through the range again. So this would be an area here to be looking for shorts in that if you trade bonds. So Thursday would be a day to be looking for short opportunities for that potential to come out the other side and take out that pivot at the very least. And they did that and a little bit extra, right? Clearly on Friday they really gunned them. Okay, let's go gold now. I'm actually long gold miners. Gold somehow has found I think it's a short-term bottom. I don't know if this is the bottom yet, because on the macro chart this is playing out, right? We have an inside quarter and down now. Unless you can get back into the last quarter's range, my bias would be to the downside on that MGC chart. So there's your monthly. Still inside bar reversal short. No, this question is how much further can it go, and which pivots are going to be relevant? Maybe that pivot there, 1671.80. Okay, so now on MGC we got a green week, but that monthly open came into play again, like we saw with the other products. That monthly open ended up as resistance, but I am long. I was long a few gold names, but going into the weekend I ended up being long just of one called AEM, Agnico Mines, or well, I'll show that afterwards. So MGC now, you can see what's going on there is that you had a Momo move on starting Monday. Momo is Momo down, right? Momo down, closing last week, and goes outside bar looking like it's gonna keep going. This is why you don't want to sell lows. So you're going Momo down. If you sell down here, man, you got stopped out fast. Momo down, then Momo up. So that's a Momo down reversal to the upside. Momo up again. Problems at that monthly open. There's that level, comes into play, and then they broke below that low there. So that's your Momo up reversal. It got people, that's extinguishes the momentum to the downside. And on Friday, it came down, tested that weekly open. They decided to buy it there and closed it for a flat day, basically. But that's a fairly bullish bar. Now we get a break back above here again. We can perhaps go and take out that high. This high is 1739. That high there was 1738. So they came really high to take out that pivot high. That's what I would expect to see if we can take out Friday's highs on MGC. Look at that, how clean that is, right? So you can see that Momo down here, Momo down. This is on Wednesday, and this is your Thursday inside bar, and here's your Friday. Is that correct? This is the 12th. Yes, or this is your Friday. Yeah, and taking out that pivot high. Okay. So that's really nice because that shows you your classic Momo down, reversal back to the upside, taking out a pivot. Very clean stuff. I'm long, as I said, AEM, Agnico Eagle Mines. What I was watching for is I was looking at a few names. I had been long Newmont. I was long GDXJ. I ended up carrying Agnico home just because I like this pattern here now. Momo down, like we saw on that MGC chart. But we actually did get the extinguishing of that Momo to the upside now, right? Sorry, it was a downside Momo, but it got extinguished to the upside, and potentially now, if these gold miners can run, we go back up there again, take out that pivot. It could be a multi-week move here for gold miners, and I got long on this inside break right there, that inside break right there. Okay, so there we go. Nothing too solid, nothing too big of a trade so far, but I'm in that, looking to add to that if it starts becoming a bigger winner. Two more charts, and then actually one more chart. Actually, we'll wrap things up. It is, of course, we wrap with Bitcoin. What can you say? Bitcoin USD all-time highs once again. One that we've been on top of for many moons. And what can you say? Bitcoin is having a phenomenal run in 2021 with that inside year continuation move up. So when I say inside year, right, we were looking at this last year, right? We say we had the double inside year. So this is going to be explosive. Once this thing can clear the double inside year, it's going to look like back we had in 2016, right? So that move looks like now, again, we talked about this. It does pull back, all right? So Bitcoin is not, you do see some steep corrections of Bitcoin. A 20% drawdown or pullback is not uncommon, maybe even more. So you're definitely going to have a lot intrabar volatility here. But yeah, it would not be surprising if enough people start to believe in it that you might see that 100,000 number that everyone's been bandying about. We're now at over 61,000 as we record this video. So classic inside bar up, right? So we were watching that last week. All you got to do is take out that level, inside bar, and you're back to the races again. And that's been a very clean move on BTC. I got involved in a number of areas here, right? Remember, if you recall, I bought this inside bar reversal here. I got along again in here. So now just riding Bitcoin up, and I'm long. I don't want to talk my long book too much. I don't want to share all the names, but I'm actually long 23 coins right now, so pretty heavily long on the crypto side. Last week and the past few weeks, I've been sharing you this chart as a proxy for these altcoins. As I said already, these altcoins, they have room to run. Not only room, but they're actually trading with momentum. So these altcoins, this is not just Bitcoin season, it's altcoin season. Not just alt, I'm saying all coins are going up. Altcoin season, it's Momo up on that altcoin contract. So you have all kinds of coins participating right now. It's the entire space is on fire. If you read the headlines, things like NFTs are becoming really big and becoming mainstream. So there's a lot of interest in the space. And are we a bit overheated? Yes. Now we're definitely getting overheated here because you're going right into Bollinger Band highs here now. This is stuff here. It has to keep going. Maybe we open up here and goes a little more, but at some point it's just going to face gravity, right? There's just gravity going to kick in, and people who buy up here. It's dangerous, right? So this is where you're buying at highs if you're buying this stuff up here now, and so you really want to look for ideally a pullback, and it could be a steep one, a steep correction to stop all the guys who are chasing. So definitely beware at this point. It's not where it was, several months back. Now you're pushing right into highs. We prefer to get involved when prices pulling back, right? We like those pullbacks to get into trades because we like to stop people out when our longs start to work. As I mentioned, in many videos now, the best rallies come on the backs of broken trades. That means, other people's broken trades are ammunition for fantastic rallies. So Kathy Wood and and the folks who follow her lots of them probably got, she probably held strong because she has a lot of capital, but I'm sure a lot of folks got stopped out on this move, and I'm just using ARKK as a proxy for that tech move to the downside. That's painful, right? This is a 20% plus correction. Very difficult to sit through that unless you have quote unquote diamond hands, but I would not try to have that diamond hands. I just want to get out fast. I don't want to, if I was in something like this, I'd be out in this area here. I'm not selling down here because it's too late at this point. Now you're going to get a bounce. At this point here, you're looking to accumulate more. But so this would be somewhere I'd be getting out in this area here if I'm long this thing. So it's better to get out early than get out too late and then you're selling at the bottom. But at this point here, like we said with the Qs, look, this is turning into a Momo down reversal, potential Momo down reversal, move back to the upside again. So in the end, maybe once again Cathie Wood gets the upper hand, and she sees price go back those all-time highs, and she remains the darling of Wall Street. So with that being said, we talked about a lot of different things today, so we'll leave it at that. As always, if you enjoy the videos, mash that like button on YouTube. If you feel like dropping any comments or questions, you can drop it either in the comment section or go to the blog page, thetradingedge.org, and you can subscribe to the videos on the YouTube or to our newsletter and videos on the blog website. All right. Well, hope you enjoyed the video. Again, stay safe and happy trading. We'll talk to you again very soon. All the best.